Joining in on the show, we have Surendran Chemmenkotil, who is the CEO at Metropolis Healthcare, joining in. Thank you for taking time out. And, given the fact that we've now seen Ameera moving to the chairperson and the whole-time director roles, she's sort of handing over the baton to you and to talk a little bit about execution of strategies. So I want to understand off the cuff, what are some of the key agendas currently and what is the future growth strategy for Metropolis?
Good morning to you and good morning to all your viewers. And thank you for having me on your show. Well, I think, first of all, let me tell you, we have had an excellent quarter. In Q4, we have had some good performance on financial parameters and all other matrices. And we have posted 11% reported revenue growth and a 15% on our core revenue. This also comes with an EBITDA of 25.5%, which is a 15% increment in EBITDA over the last year. So overall, we have had a good quarter. And like you mentioned, as Ameera has been transitioned into the executive chairperson role now. And going forward, I will be running the business, with, of course, the guidance from Ameera. And, so the strategy execution, day-to-day operations in the business and leading the team, etc., is going to be my responsibility going forward. And I'm really excited about it, having spent after about 1.5 years in this company. And going forward, our growth strategies, remain largely intact as we have been talking so far. One, of course, is on the network expansion. We are planning to add more labs in the coming days and penetrate into different geographies, particularly on the north and east, and also supplemented by our expansion of the collection centers. So that's going to be our prime focus. And we are also going to put special efforts on improving the wellness portfolio and are also, further expanding the specialty business, right? So this is going to be our strategy and also providing an excellent consumer experience through our digital initiatives and also improving the processes and efficiency by using the technology at the back end. And these are the plans on the organic side of the business. And of course, we're also exploring opportunity to grow the business through inorganic as and when we get an opportunity. So that's largely the agenda going forward, for the company.
Mr. Surendran, the other thing I wanted to talk about was your volume growth, because that still remains in single-digit zone. How much growth do you think pricing can sustain? And is there a risk of single-digit revenue growth in absence of your price hike? So you're confident of double-digit growth ahead as well?
Yeah. So in fact, if you look at it, we have had 9% volume growth last year, which is the highest in the industry, right? So I think 8-9% volume growth is one of the best in this industry, and we have delivered that last year. Of course, a little bit softening in the Q4 because we have taken a price hike from January, but I think the volumes are stabilizing and coming back. So I think 8-9% volume growth and maybe about to 5-6%, the realization growth is actually doable in the industry, and we are really looking forward to that kind of a composition in the days to come.
Sure, Mr. Surendran, good morning. This is Vinny joining in the conversation as well. Now, what also we want to highlight and talk about is your core markets. They have done very well, especially Maharashtra. Could you talk to us about the growth levers that you're expecting going forward, and currently what was it that supported the growth?
Well, I think Mumbai is our, flagship market, and of course in Mumbai and across Maharashtra, we have really done exceedingly well in the last quarter, and of course in the full year. The growth levers in Mumbai and particularly in Mumbai is continue to be our B2C expansion of the collection centers. We currently have about 420 odd centers in Mumbai, and this number can definitely get better and go up. And we are looking forward to take this number to maybe 500 plus in the next year or maybe 6 quarters from now. And that's one aspect. And secondly, our specialty business through the B2B segment is also doing well in Mumbai. And we are accelerating the B2B business by adding our test menus and our competencies all across the new segments coming up on the specialty. So, and also we are, getting better on the existing centers. The productivity of the existing centers in Mumbai is getting better. And as a combination of these 3 things is actually driving the growth in Mumbai toward the levels that you're seeing today.
Despite the fact that there has been pretty strong revenue growth, the EBITDA margins are in a bit of a range. I just want to understand what the outlook is. Do you see your EBITDA margins breaking out of this range? And if so, what will be the factors contributing to that?
So we delivered 25.5% EBITDA in the last quarter, which was the best quarter for us during this year, right? We also, of course, we had one or two exception items in the previous quarters, but I think quarter four has been pretty clean and we have delivered a 25.5% EBITDA. And I see this is a sustainable number, or maybe we get better from here, maybe by 0.5% over percentage in the next coming quarters. So that's the outlook for EBITDA.
The other thing, Mr. Surendran, I wanted to talk about was what kind of competitive intensity are you seeing currently within your business segment? And keeping that in view, is there more headroom really for price hikes?
So, well, I think this industry has always been very competitive, like for one reason or the other. At every time, every phase of the industry, the competition has only got harder and harder. And Metropolis did what we are good at it. And, we are a specialized brand. We are a brand which is very much endorsed by the doctors. So we kept, stressing on our strong points and we are growing the business. So we are not really seeing, we already taken a price hike in the month of January this year, and we are not really looking at further price hike during this year, right? And hence, that's not the option that we are looking at, but we are looking at increasing the revenues by increasing the volume as well as the realization. So that's a two, by basically the product mix of wellness and specialty put together. So those are the levers we are looking at for the growth going forward.
For growth, but I also want to understand in terms of your premium wellness business, that's grown around 22% YOY when you're looking at it. What is the outlook for that? How do you see that contribution changing and the growth that you're expecting there?
With the advent of all these tech players and, the wellness market has really grown in the last 2-3 years. And also the consumer awareness about the wellness and the need to do health checkups, etc., is really getting better. So that's really helping us in terms of growing the wellness portfolio. Last year, we grew by 22%, which is only 15% of our overall business. And we could clearly see a headroom of another 4-5% on this one. So the wellness revenue we could take this into almost 20% in the next couple of years. So that's headroom that I'm seeing, and we're really working towards that.
Okay, so 20% around is what you're expecting, a mix coming in from the premium wellness side. That's quite interesting. And just want to understand in terms of your expansions, lab expansion plans, anything specific that you have in mind, and anything in terms of a requirement of cash flow or a capital that will require specifically next year?
Well, I think, lab expansion strategy is basically going deeper in our strong market and going wider in our, opportunity market. That's always been the expansion strategy. And of course, the expansion of the labs involves some Capex, and we have allocated some Capex for the lab expansion for the coming year also. So we have allocated Capex, and it's not only lab expansion which will require Capex for the coming year. Also, there will be, expansion of the centers. And we also have to replace some of the equipment which will find its end of life, or maybe upgrading of some of the equipments that we need Capex. And we also need Capex for, technology enhancement. So these are 3 major headings for which Capex will be planned for the next year.
Surendran, great to have you on the show. And once again, congratulations for your tenure as CEO.
Thank you very much. Really appreciate it.
If you like this video, then like, share and subscribe to ET Now.